G'day everyone, welcome to the weekend general update for the 23rd and 24th of March. Markets got a little bit rocky last week, but certainly in the US finished fairly well on Friday night. And at this stage, if we are in a correction, and I think we are, it's certainly looking like a very mild one at this point in time. A little bit of initial anxiety about what's going on in Cyprus and how that may affect other European countries, but look, I think it's not a particularly big deal. And really markets are basically responding to the weight of money, particularly in the US. So let's have a look at the summary of last week. First of all, just a reminder about the licensing and general advice nature of this video. So the S&P ended up losing, that should read 3 points on the week, apologies for that. So down just a couple of points, and as we'll see from the chart in a minute, it's really just day down, day up sort of stuff in America at the moment. So it remains very much in the resistance zone that I've been pointing to now for the last month or so. And this could be really just playing out more of a pause rather than any sort of reasonable correction. Now our market, this is really a timing issue because we had a very good day the Friday before last week. We ended up losing 153 points last week, so there was a substantial turnaround on Monday, and that really made a lot of the difference. And a lot of that was in the resource majors. BHP and Rio Tinto got absolutely slammed in the London market, and that translated through to the Australian market as well. So they were the main drag on the index last week. Banks held pretty steady. They did have a couple of down days, but recovered that ground pretty readily. And what I am seeing is that reversal patterns in high quality stocks, so I'm talking about the stocks that have got extremely good long-term financial fundamentals, are working really well. So the patience in waiting for a bit of a sell down in those really high quality stocks is paying off very, very nicely. Now gold gained another $11 on the week, so that's the third week up in a row for gold, and certainly looking a lot more robust at this stage. Traded up to the top of the short-term resistance zone that we'll have a look at in a minute, and stock indices, whilst they haven't really taken off yet, it's a very begrudging upturn, but certainly still showing some further signs of improvement. Copper, and this is a real mystery, copper down to $3.46 a pound, and that's not a good sign. Copper remained incredibly strong last year and into the early part of this year, when the economic outlook was far worse, or appeared to be far worse than what it is now. We've now got the economic outlook, particularly in America, just continuing to improve, and yet copper has gone down. So very hard to actually work that one out. Oil rose slightly to $94. That was really a bit more of a currency effect, really the US dollar going down. And here is the chart you can see on copper. It actually dipped a little bit lower and then just recovered a little bit in the last couple of days. So let's have a look at some charts. We'll start with the S&P. So we'll pan back and have a big picture look at this. It's been a terrific run. You can see whenever the price has got very significantly above this trend line, there's been a correction. So we got one here in April of 2012. Then again, the market got a bit ahead of itself. That was in September of 2012 and pulled back to this trend line. You can see now we've been significantly extended above that trend line now for some time, and so at some point the market will pull back. However, just looking at the signs, I don't believe it's going to happen just at the minute, because there's still a lot of momentum in there. There's no real signs of a sharp move to the downside. It's possible that the period that we're in now may be something similar to what we saw here from September to about October, the middle of September to the middle of October last year, where we got a series of running tops, and you can see slight downward bias. Each of those tops was slightly lower than the last one, and the lows were slightly lower than the previous one, and eventually that gave way and we had quite a sharp decline in November, lasted about 2 weeks, and then the market was off again. I've got a feeling that we might see something similar to this now at the index level because we are so extended. So we could see a series of tops here that run through to perhaps the middle of the year, and then we might see a period of weakness from, say, June, July, August, which is typically the weakest time of the year. So I think that the pattern certainly has that look about it, that we're going to get a series of tops, perhaps at the same level or slightly lower. But anyway, we'll have to see how that pans out. The potential support levels for me at the shallow end around 1533, and at the deeper end about 1480. At the moment there's no indication that we're going to come down to that sort of level. So as I said, I think we might just see a series of running tops for a few months at the index level, which means that good quality stocks can continue to rise. Let's have a look at the Australian index. So we had resistance up here. If we pan back and have a look, we had some resistance that went all the way back here to 2008. We got up to that resistance and we've pulled back now to what may now prove to be a support level. We'll just have to see over the next few days. I've got a potential support level down here at around 48.50, just a touch under, so we could see another 100 points come out of our market at the index level. Now if we look at this on a relative comparison chart, we'll have a look at the individual sectors on the Australian market. You can see that healthcare at the top, the XHJ is still way out in front, and in fact has even increased the gap significantly over both telecoms and banks. Telecommunications sector, which is really almost completely dominated by Telstra, has really just gone flat in the last few weeks. Banks similarly just kind of flattening out a little bit. Energy really hasn't done a great deal, but we've seen the small caps and materials sector in particular has fared the worst. So the selling in BHP and Rio has really had a major impact on this particular index, the materials index. Now let's have a look at gold. This is gold on a weekly chart. So you can see this 1550 level still holding, and ultimately a close. I'm looking for a close above around about 1740 at the minute would be the real test that we're now into a new bull market, but I think we'll get some signs before that. And looking at a daily chart, I'm really looking for a close above the high of the 26th of February. That level was 1617. Now we've got another level up here at 1625, which comes in around the lows of the 4th of January. So for me, a close above 1625 would indicate that we're starting to head into a renewed uptrend. So that's what I'm looking for in gold. But I would expect to see the gold stock indices probably outperforming prior to that happening. So let's have a look at those indices. This is the GDX, Gold Miners Index. And you can see there is an upward bias there in the last couple of weeks. It's a little bit more apparent when we go to the juniors, and you can see that we actually have taken out this previous high. So the high from the 26th of February, we've taken that high out now, and we've been above it now for 6 consecutive sessions. So that's a more positive sign in the gold stock indices. And finally, we'll have a look at just one other index that some of you may be tracking, and that's the Amex Gold Bugs Index, which is the HUI index. And you can see it's also starting to turn up at this stage and looking much more positive. So let's have a look at where the opportunities may lay in the Australian market. Reversals from oversold. I think we're coming into a period where we're getting a little bit of correction. We're getting some profit taking of some of these stocks that have run up very hard, and the engulfing candle reversals that I posted a video on recently is working really nicely in the high quality non-resource stocks. You don't want to go applying this across the board, but certainly in that sector of the market it's working extremely well. Now there's also some good contrarian opportunities setting up. We're not quite there yet, but gold stocks moving into a new bull market that I think will last for perhaps a year, possibly a couple of years. We're generally not into that yet across the board, but I think that's definitely a move that's coming. And whilst I'm not expecting to see a new bull market in iron ore stocks, they really have been slammed very hard, and I think there will be some opportunities for just a reversion to the mean trade in iron ore stocks. So that's it for this week. Talk to you again next weekend. Cheers.